Do you feel like you're constantly fighting an uphill battle in the markets? You're not alone. Most traders struggle to consistently make profits because they're trying to beat a ghost. They're chasing random price movements instead of understanding the underlying psychology that drives the market. The good news is that once you unlock the secret psychology of trading, everything changes. You gain clarity in an otherwise chaotic world. In this video, we'll delve deep into the psychology of trading and reveal the mindset shift you need to join the ranks of the market's elite. Number 1, the market is not random. Most new traders believe markets are random or worse, rigged against them. But what if I told you the market is neither random nor chaotic? Instead, it's a carefully choreographed environment shaped by human behavior, psychology, and the strategies of institutional smart money. Smart institutions and funds don't just react to price, they design the environment. They exploit predictable emotions, fear, greed, and hope. Retail traders, on the other hand, chase moves, trust indicators blindly, and become the liquidity that smart money feeds on. When you realize trading is a behavioral game, not chaos, everything changes. Number 2, liquidity traps and stop hunts. Have you ever bought a breakout only to see price instantly reverse and stop you out? That's not bad luck. That's a liquidity trap. Smart money knows retail traders place stops in obvious areas above highs, below lows. They drive price into these zones, trigger stops, and quietly build their positions. To survive, you must stop being the liquidity. Learn to spot the trap, not fall into it. Number 3, market phases. Markets move in phases. First, accumulation, where smart money builds positions quietly. Then absorption, where price stays flat but volume builds as large players soak up liquidity. Next comes markup, the explosive rally retail chases. Distribution follows, where smart money unloads positions, often disguised as consolidation. Finally, markdown, the decline retail sells into at a loss. Most traders only see markup and markdown. The pros win by positioning earlier during accumulation and distribution. Number 4, the hidden map, volume profile. Traditional price charts only show surface moves. Volume profile reveals the real structure where traders committed capital. High volume areas are magnets, zones of agreement. Low volume areas, they're highways for fast moves. Smart traders map these zones to anticipate where price will stall, where it will explode, and where traps are set. If you want the market's roadmap, learn to read volume profile. Number 5, risk management, the trader's lifeline. Here's the brutal truth. Without risk management, nothing else matters. Even the best strategy fails if you over-leverage or chase losses. Professional traders risk 1–2% per trade. They use logical stops based on structure, not emotions. Risk management isn't about fear, it's about survival. Protect your capital first. Only then can you play the long game. Number 6, patience equals precision. Most retail traders overtrade. They confuse activity with progress. But the best traders are patient hunters. Patience is not passivity. It's precision. It's waiting for multiple signals to align. One great trade is worth more than 10 average ones. Trade less, but better. That's how you preserve capital, confidence, and discipline. And number 7, trading as self-transformation. Trading is more than charts and setups. It's a mirror reflecting who you are. Do you trade out of fear, greed, impatience? Success comes when you master yourself. Discipline, self-awareness, emotional control. These are the true edges. The market teaches you patience, resilience, and consistency. Trading becomes not just a skill, but a way of life. Let's dive deeper into each of these psychological secrets. First, understand the market is not random. Behind every price movement, there's an intent. Large institutions and funds, the market's smart money, they don't just react to price, they create it. They know how to influence the crowd's emotions to get the desired result. And guess what? You have the same power. Once you understand the market's not a chaotic mess, it's a behavioral game. Everything shifts. You gain clarity, focus, and the ability to spot hidden patterns. Stop chasing random moves and start anticipating the crowd's next move. Second, avoid liquidity traps and stop hunts. Smart money knows where retail traders put their stops, above highs and below lows. They use this knowledge to their advantage, driving price into these areas, triggering your stops, and capturing liquidity. Don't be a victim. Become aware of the trap and stay alert. Third, learn to read the market's cycles. Markets go through distinct phases. First, accumulation, where smart money buys in quietly. Then absorption, where price consolidates, but volume rises as big players soak up liquidity. Next comes markup, the explosive move retail traders love. But don't chase the hype. Remember, smart money already made their move. Distribution follows, where institutions offload their positions, often hiding it as consolidation. Finally, markdown, where retail traders sell at a loss. Learn to recognize these phases. Be patient and wait for the right moment to strike. Fourth, unlock the hidden map, volume profile. Traditional charts show price action, but volume profile reveals the real market structure. It exposes where big money institutions have entered or exited positions. By reading volume profile, you gain insight into areas of high interest and potential breakouts. It's like having a secret weapon on the trading floor. Fifth, master risk management, the ultimate game changer. Even the best strategy backfires without proper risk management. Don't chase unrealistic returns or take unnecessary risks. Keep your emotions out of it. Determine your edge and stick to it. Use logical stops based on price structure, not random levels. Remember, it's not about the size of your position, but the management of it. Sixth, embrace patience, the virtue of precision. Most retail traders overtrade due to impatience. They think more trades equal more profits. But that's not how the market works. You must learn to wait for the perfect setup, one that aligns with your strategy and shows high probability. Take your time, observe, analyze, and strike when the conditions are optimal. One great trade is worth more than 10 mediocre ones. Finally, understand trading is self-transformation. Trading isn't just about charts and setups. It's a journey of self-discovery. It mirrors your current state of mind. Are you driven by fear, greed, or impatience? Your trading reflects it. But here's the good news. Trading helps you evolve. It teaches you patience, resilience, and emotional control. As you master yourself, you master the market. It's time to stop chasing random price moves and start understanding the psychology behind them. The market's not a chaotic mess. It's a game of behavioral economics. You have the same power as the big institutions. Once you grasp this, everything changes. You gain clarity, focus, and the ability to predict the crowd's next move. But remember, it's not just about knowledge, it's about applying it. Implement these psychological insights into your trading and watch your results transform. Don't be a victim of the system. Become its master. Unlock your potential and achieve success on your terms. Thank you for watching this video. If you found it valuable, consider subscribing and joining our community of like-minded traders. Together, let's conquer the markets and achieve financial freedom. Until next time, happy trading.